Well, this market, it's got its ups, it's got its downs, and it is all over the place. And I'm going to bring in today an expert who I believe who can help make sense of this market. Let's bring in Chris Pulver, who is also the CIO and founder of Streamwise Capital. Chris, good to see you. It's been a long time since you and I have had a conversation like this.
Yeah, Blake, it's always nice to hang out. I think the last time we had a conversation like this was probably when we were battling it out during a trading battle.
Yeah, yeah, over at the Eightcap trading battle. And,
Yeah,
and we've had a couple of those, and
I know.
it's always fun. And Chris, I know not everybody knows who you are. Every time we do an interview with somebody who hasn't been on Trader Summit that often, they might not
hmm
know exactly who you are and how you tackle the market. But I think you have a really interesting story because I look at you as a jack of all trade from an expert point of view. You tackle the market as different strategies arise,
hmm
and you tend to tackle it quite efficiently. And as those trends wear off, you tend to go in a different direction. And I think that's really awesome with you. So why don't you tell traders a little bit about yourself, how you got into this business, and kind of how you're tackling the markets right now?
Sure. Interesting story. I mean, so when I was 18, going off to college, I had an older brother. He's 8 years older to get his PhD. So I followed him where he was at for PhD was Purdue University, and I went there for undergrad. I opened up my first Roth IRA, started trading. I had a TD Ameritrade account at the time. We decided to start a little investment club where it's just him and I. His wife was involved. He had some colleagues involved. We ended up building it up to about 15 members. We participated in this thing for 20 years. Our goal was we subscribed to a couple services, just kind of following some trade picks, building some fundamental scanners, and most of it is just a big lesson in time in the market. So I was always interested fairly early. I don't know what, maybe it was watching Wall Street when I was a kid or something, or watching anything that's kind of finance related, but I was always intrigued. I mean, I grew up playing video games. I mean, my earliest system was an Atari, Nintendo, Super Nintendo, Sega Genesis. Getting into one system that nobody really knows, but it's called 3DO. It was a Panasonic system, and then Dreamcast at the time. All this was obsolete, made by PlayStation, where it's like PlayStation started to get better and better. Anyway, long story short, I was always like a gamer, right? I always want to play games. And to me, I thought the markets felt like a game. It's like you can buy here. I like looking at charts. I like, seeing charts. So my brother and I started dabbling. We put together some cash where it's like monthly dues, and we just have some money to work with. Participate for 20 plus years. We did really well. We did extremely well. And unfortunately, at the time, it was 2020. This is COVID. The university that my brother worked for is actually a small Division II college, but they closed because of COVID. And a lot of the professors and coaches and people that were involved with the club also were like, "Hey, we're going to be shut down. We're trying to find other jobs." And so they cashed in. But everyone left with some pretty nice pockets after 20 years in the markets. Now, I was so interested that about 6 or 7 years into this, I mean, I'm in college, finishing school, getting my master's degree as well. And I ended up wanting to travel and work in something that I loved. And you might be thinking like, oh, did he just go work for a bank or get in finance? No, I went to the golf industry. So I ended up going down to South Florida and running an instruction franchise where I was just a director of instruction. I'm running these stores from West Palm Beach down to Miami. I had 4 stores. And one of the clients of the Miami store, this guy came in every single day at like 11:30, 12 o'clock Eastern time, right around lunchtime, rolls in a scooter, shorts, t-shirt, hangs out, hits some balls, talks shop a little bit. And all I had on him from a profile was just like finance. That's all it said. Well, he's not a suit and tie guy. He's not a finance guy. Like, what is finance about this guy? Well, it turns out he's a full-time Forex trader. He managed a fund. He was running like $15 million. All he traded was a 3 hour window every single day trading the euro dollar. That's all he did. So, we became pretty good friends. I never charged for a golf lesson, but I wanted to know what the heck he did in the Forex market. So when I really started to dive into trading, it was in the Forex market. So passive investment on the stock side, um, active trading, scalping, day trading on the Forex side. And, from that point, it's like I just my mind and my eyes were wide open, and I was going to learn as much as I possibly could to figure out if I want to do this, whether it's full time or passively, like I'm going to figure out how to do it. So I never quit my day job. I stayed in the golf industry. I made pretty good money. I also went overseas for a few years, and my goal is to come back with a nest egg to trade and also have a year or two of expenses paid for and give this a full time go. And I was able to do that. So 2009, 2010. I am back with a nest egg. I'm full time trading. I'm back in Miami with this guy. We're managing some money together. But I started to get away from the daily trading. I started to really gravitate towards position trading. I really like the idea of investing in the forex market, seeing big levels on higher time frames. And at that time, we'd also gone through the great financial crisis, and so I started learning about options because our little group portfolio got toasted during 2008 like everyone's did. So I was like, there's got to be ways to protect this. There's got to be ways to hedge. There's got to be ways to play this game a little bit better. And so it just kind of all was building of like, I'm just going to learn more and figure out if I'm managing my money or anybody else's money, how would I do it to have the highest possible returns with the least amount of risk. And fast forward now, it's like I've been managing capital for over about 15 years, and I'm happy to say that that's exactly my goal. Is I'm trying to make the most money I possibly can, Blake, with the least amount of risk. And usually that looks something to the effect of, my drawdowns typically stay within about 5%, 10%. And my performance is usually close to double that. So that's been about the average is about 20% gains on the upside and single digit drawdowns. And it's not easy to do. But the way I trade now, it's like I'm heavy in the indexes, equities, option space. I do still have, investments in Forex. I still, trade big levels in Forex and big time frames. I trade the futures market, which is great for hedging. I'm in crypto. I've been in crypto since 2016. So as you said, like I'll trade anything that I think has potential. And I am a huge option trader. I trade every single day in the options market. It to me is one of the greatest tools to trade because you can trade up, down, sideways. You can trade for income. You can trade for speculation. You can trade for leverage. You can do all sorts of things. And the creativity you can have, it does feel like you can play, chess with the markets instead of just, I have to buy here and hope it doesn't invalidate. I have to sell here. I hope it doesn't invalidate. I can trade time and price, and I give the trade the full time to work, or I give, price a chance to work. I get partial profits. I get lots and lots of base hits. I mean, I think last year, Blake, I probably placed 40,000 trades in my portfolio. And that's a lot of base hits, man. I mean, I produced almost 40% for the year. And it was just, I don't think I had a winner that was over, 5%, but my winners and losers are all like little base hits. And
I
but I
think
trade
a lot
actively.
of traders really have a hard time understanding it is about the grind of the market, right, Chris? I mean,
Hmm.
we're talking about the number of trades that you trade
Yep.
or that you've taken, it is really about just the little wins in the market that add up.
Sure. Well, think about giving yourself the chance to survive. I mean, any one trade, and this is a big hurdle for a lot of traders to get through. Winners feel great, but they don't hurt as bad as losers, right? Like loss aversion is a very real thing in this market. Psychologically, people would rather not lose and do anything in their power to not lose versus just understanding that losing is part of the game. And I became a much better trader and a much more seasoned trader and a much more profitable trader when I was emotionally ready to take losses. I was willing to take losses, and it just became back to risk management. I mean, if I take a loss, I'm usually risking less than 1% of my account. I can stomach that loss and go find another trade. In fact, I could probably find 10 more trades before I ever lost a full percent. Like that's how small I trade, but I'm also very active. So that way I can just keep trading. I can stick to the process and the profits will roll in. I trade on probability. I trade on technicals. I trade on everything that looks good. If I'm placing a live trade, it's because I think I can win. I'm not the type of trader that like, well, this is a 4-to-1. I'm going to take this trade because the risk is so small and the reward is so big. It's like, well, it's probably a low probability trade. But if I take a high probability trade that I win often, or a high probability trade that I can win enough where it offsets my losses, I will do that thousands of times, and probabilistically, I'll be good. I'll have a mechanical edge, and I'll make some money. So
So
I try to tighten up my tail on the risk side, but I mean, I'll take as much profit as I can get, but I understand that I trade small, so I can't expect 100 to 200% gains because I'm just taking really small risk. But when I can beat a benchmark and perform pretty well at a high level with very little risk, that feels pretty good because I'm really not a stress trader. But it's
sure
taken a
thing.
long time to get there.
Let me ask you this. This is obviously, this market that we're in and one we've been in, and you and I have had private conversations where you really have to change up your strategy. And I personally have. I've become much more shorter short
Mhm.
term in this market due to headlines and the headline risk. And obviously, if you're trying to long term position trade, it is a little bit more of a difficult challenge. So let me ask you how your trading has changed over the last, let's call it since 2025 or since President Trump took office.
Yeah. Well, first and foremost, I mean, I was benefiting from the Trump bump into the election last year, so that was a nice little pop towards November, December. I carried that into this year with a massive hedge. Like I was like, I think we really have. I mean, everything you saw in the headlines was, Mag 7 concentration. The S&P is now 30+% all tied up into 10 stocks essentially with their performance. So the Mag 7, the top 10 stocks needed to rotate. It was way too much exposure on those very few stocks. And so that's how I started this year was I think we're going to have a correction. I saw at least a 10% correction happening. And that was precisely what like February's top to, March's bottom was. And then, of course, you throw in Trump, you throw in the uncertainty, you throw in trade war, you throw in Liberation Day, you throw in all the disruption that just happened, and 10% corrections became 20+% corrections. And I think my goal was as crazy as it was that was all happening, just like any other time I've seen the VIX spike. When it's up to 40, 50, 60, the volatility index is spiking. I am taking risk-defined stabs, and I'm still trading, and I'm actively trading. And at those times when, I mean, for me as an option trader, I can sell premium and have the expected moves be way beyond what is probably the actual move, because once volatility reverts, we're going to see profits likely taken in. So I mean, I was looking at intraday swings on the S&P that was going, the SPY was going 15 points a day, 10 points a day. It used to go like 3 or 4 points a day. So I mean, the volatility had doubled and tripled over a short window. And all I'm going to say is you got to trade through it. I mean, risk is going to be the only thing you can control. I like to trade small, so I don't have the crazy risk where, at one point I was down about 8% during all this crazy stuff with all my option trades. I was down about 8% with floating P&L, but I'm up double digits. I'm almost up 20% for the year right now. And so I survived it. And a lot of my expirations I've taken off. I'm actually surprised that the market has reflexively rallied this much in the last like 3, 4 weeks. I just posted this today. I had OpenAI make me a meme that said, please give me a pullback, because I'm like, look, I want to participate to all-time highs, but not at all-time highs. I want a
Right.
pullback or something. And the currency markets have been wild. I mean, the dollar had one of the worst starts in 35 years. We've seen some big swings in the dollar index. The Japanese yen, of course, does its thing, but structurally, the yen was actually very cooperative. We had those big lows from August of last year, August 5th lows, and CAD yen was perfectly bottomed at those levels. Aussie yen, New Zealand yen poked through them and crashed back up. The dollar yen came down to that 140 handle. I mean, you got some really good technical levels based on support from last year on the yen crosses. And I think that's been to me, the theme is there's been good technicals on the dollar, good technicals on the yen pairs. And then, you've got this whole dynamic of US and China. That's really what this whole trade war is about. It's US and China. Everyone else is kind of finding their place, but the US pretty much tried to break it. I mean, they tried to break the global economy. They didn't realize it. I think that's why the market flinched and flexed the way that it did. And you can see that Trump and company also flinched when the bond market essentially broke for a day. Liquidity dried up. We've got the basis trade breaking up, and yields are higher. Inflation isn't really being priced in. We're trying to talk about the strong economy, resilient economy, which I think to a degree we have it. But ask anybody on Main Street how they felt the last 5 years of their life, and I feel like they're still struggling. We got a lot of people living paycheck to paycheck, unaffordable housing. I mean, all these things are like stacking up where it's like, it's not that great. Like Main Street, Wall Street, not that great. Wall Street will always be Wall Street. Greed and profits over everything else. My biggest concern going into this year with Trump potentially breaking the global economy is that the U.S. ends up on its own island. This is what Jamie Dimon said. He's like, America first is fine, but America alone is not.
Yeah.
And that's what I felt we were going. It's like we were so close to completely isolating ourselves where we're gonna force other alliances that basically leave us hanging. And I think it showed, that April 7th, April 8th window with Liberation Day and shortly after, it showed that if the US sneezes, the world gets a cold. Right. Like it was a systemic couple of days where things could get really, really nasty really quickly. And so the resiliency in the US markets, I think, helped stabilize things. But you can see that the flows are way better outside of the US. If you're following non-US instruments, like you're following the Euro markets right now, Japan has traded a lot like the US this year, but like China's been up, Latin America's been up, emerging markets have been up. Everything's been kind of repatriated going back home.
Yeah.
And I almost wonder right now if we're in this window of like fiscal expansion globally. I think that what Trump did do is with this whole trade disruption, it forced countries kind of look at themselves, look at their surrounding trade partners, and think, what are we going to do that's going to help us grow? Because we have been willing to grow by adding to our deficits every single year, and we have American exceptionalism. But we've had austerity in Europe, and now they're spending $1 trillion in defense. Now they're looking to repatriate and bring money back in the Eurozone. They're putting in policies to trade with Russia, to trade with China, to trade with closer proximity trading partners. And so those stock like those indexes are up double digits. The US just got back to break even this like literally this week. So I think that the world could potentially outperform the US this year. But I'm obviously hoping that the US remains resilient. I think that it was a nice plan to try to cut government spending, and then you just see how bloated and corrupt and fat the government really is, and it's very difficult to do. And on top of that, just with necessities and essentials, unless you're going to cut military or cut, Medicare, Medicaid, you're playing with 100% GDP anyway. Like 108% is already spoken for, so we already have a deficit. You throw stuff on top of that, that's why we operate at like 6 or 8% deficit every single year, and it just continues to grow. So I think Trump and company had a good plan. They clearly see how nasty it would have been if they wanted to follow through, and that's still the wild card. It's not a 0% chance that we don't play tough again with trade war. But I think if Trump wants to celebrate his legacy and have all-time highs and not lose the midterm, then he probably needs to back off and let the narrative be a little bit more optimistic.
Right. Okay. Well, now you're talking a lot about the current macro environment of the
Mm-hmm.
markets, and I want to ask you before we talk a little bit about what you do on an intraday basis. How much does the macro environment play into the way you're going to strategize your longer term, let's call it currency portfolio?
Yeah, so currency wise, like I'm mostly long term because I like to position trade in Forex. I like to trade really small build positions on major areas, wait for like these large extremes of like a daily oversold, a weekly oversold, or overbought. I mean, I look for those like overbought with divergence, oversold with divergence on higher time frames. The probability of those reverting, the probability of those pulling back. I love pockets and inefficiencies of the market. I love supply and demand levels, simple fib retracements as well. I mean, if you have this big giant swing like the dollar index, likely is we're going to pull back maybe 23 to 38%. So it was not surprising that the dollar has strengthened the last few weeks to have a little bit of retracement. In the macro environment, Blake, it's so noisy now. I mean, as you know, it's like every single day, it's like, my gosh, man, if we traded the news, it would just be your head would be spinning and it'd be you're buying one day, you're selling the next day, you can't make up your mind. So that's where the probabilities come into play. That's where, when I trade options, especially, a lot of it is, look, I'm going to build a trade. My risk could be, $1,000. My reward is, $200, $300, but my probability of profit is like 95%, 94%. I'm going to trade. I'm going to take those odds. I'm going to take that trade. And a lot of it is I'll protect partial profits, or I'll just, if it looks really good and the price is going my way, then I'll hold the full expiration. But for the most part, it's very mathematical. It's very systematic. And so that way, when I place a trade, my daily routine is I come into the markets at opening bell. I'm spot checking like maybe about an hour before. I'm just kind of at the computer prepping a little bit. But when it comes to opening bell, I'm essentially like I day trade some indexes every single morning, and I spot check the portfolio A to Z. I'm looking at the macro picture. I'm seeing what currency strength is doing for what's leading, what's lagging. I mean it's top down every single morning. I think the routine now is probably done within about 30 minutes. Any crazy news? I mean, I can't recall ever in my career when a president has been on the economic calendar, but Donald Trump is almost every single week. So that's also like an outlier thing you have to watch for is like, is he going to say something at 10 o'clock in the morning? Is he going to say something at 4 o'clock in the afternoon? Is there a tweet that comes out later in the day? It's like that. It's crazy that could be so disruptive, but he clearly is able to move the markets. And that's good or bad. It's good if you're participating, but it's bad if you have no idea like what strategy can help you make money. So
Yeah.
I think at the end of the day, the best thing that traders can do is just not trade big right now. I mean, there's still a ton of uncertainty, and I don't know how this whole thing goes. We also could have a longer period where everyone has been conditioned now for years. I would say probably the last 8 to 10 years, maybe since the great financial crisis, traders have been conditioned that if you just buy the dip, you're going to make money. And it's just been nothing but direction for like a decade plus. I almost wonder. I mean, the last time we had sideways price action was 2015 and 16. 2016 and 17 was really slow in everything, like low volatility in the currency markets, low volatility in the stock market. Volatility is crazy right now, and I think that's great. I mean, it's good for scalping, it's good for day trading, it's good for swing trading. But I also think you have to rule out a lot of the noise if you're trying to trade news, if you're trying to trade what Trump is saying or what they're going to say or what the Fed's going to do or what the data's coming in. I just think you follow your technicals. I mean, I can ask you this, like as a longtime Forex trader, do you think you've had more success trading technicals or trading fundamentals, in your opinion?
Oh gosh, it's mostly, it's everything's theme based, and right now, as you pointed out, everything changes and it can change relatively quickly. You just
Yep.
saw how bearish the whole market was on the dollar and how quickly that unwound on them. But just this small correction will probably due to resume that trend because the overarching themes don't really change a whole lot.
Mm-hmm.
But in this administration, you do have to be very nimble, and I think
Right.
that's one of those things. Like I said, I think you're very, very efficient at, Chris. And which brings me to the point I wanted to talk to you about before we wrap things up. You have a daily show that you are live at the end of the day. Kind of, tell us a little bit about what happens during that end of the day show.
Yeah, I call it my final hour. It's just 3 p.m. to 4 p.m. Eastern time. I'm on my YouTube channel. It's youtube.com/Chris Pulver. It's free for everybody. It's just a free organic channel. It's trust content. It's my little labor of love project, where I could just talk openly and freely about everything I'm doing, from the trades I'm in to the trades I'm liking to finding new trades to seeing what the market's doing to, I mean, think about how many traders were helpless during these last like 30 to 60 days. If you didn't know what you're doing, if you didn't have a plan, it's nice to talk to somebody that knows, hey, look, I've seen crap like this before. Regardless of what happens, I'll figure it out. I mean, I had hedges in my portfolio, Blake, that would have paid 45 to 1 if I needed them. I didn't need them. It's like I had ways to protect myself, but for the most part, it's like I'm just trying to grind through it, trade through it. And usually I've done that for 20 plus years now, and I've done okay with it. But I think now my precision, my risk management, my emotions are, way more balanced and as good as they've ever been. And I am as prepared as I think I need to be for anything the market throws at me. And to the point where I actually get annoyed. I mean, I do get bothered by, like, I can't believe how stupid this move was, because here's what I'll say. If the stock market, for example, in the US goes back to all-time highs without having any type of pullback or any type of retracement, then we just had the dumbest 20% correction in the history of the stock market, in my opinion, because it was self-inflicted and it didn't do anybody any good outside of disrupting everything in the global economy. That's all it did. And and somebody's going to argue like, well, that was the whole plan. It's like, no, it's not. This was not the plan. I think this whole thing was rolled out like idiots rolled this thing out, and there wasn't a plan. But what it showed is it showed how strong and how big and important the financial markets are, because the tone has completely changed. Like, the recession talks now are at a minimum. The hard talks of, everyone's going to get tariffed and this is America first. It's like all that talk is gone. It was like radio silence for a couple of weeks as the market's going higher. And all I'm saying is, I just think I hope we don't go to all time highs, because look, I'm prepared for whatever the market throws at me. But there are things that I think are still stupid. I think there's still things the market can do that you're trying to, we are like rational beings, but we're trading things that can be very irrational. And that's where I think it all comes back to just risk management. If you never risk something that makes you uncomfortable, then you should be able to navigate and trade through it and just survive. And I think, and it's not fun, it's not sexy or glamorous to talk about that. But I'm telling you, if somebody that wants to do this for the next 5 years or 10 years, it's going to be about survival, because it could get wilder and crazier. And we have seen nothing but chaos since 2018. We've had literally 7 bear markets in 8 years since 2018. That's insane to think about.
That
That's
is.
how up and down these markets have been. And if you're a currency trader, you have ebbs and flows. If you're a stock market trader, yes, the bigger picture, we have made many times over all-time highs. But think about the fear that has been put into these markets. Think about how media latches onto these themes, and they just do nothing but drive fear in your face. And you're like, I don't want to be in the markets. I don't want to be. I'll just go to the bank and try to trade something very safe and risk free. It's like, it's not risk free. I mean, I would rather put money in an Apple muni bond or an Apple corporate bond than I would putting money in the US government, trading US bonds. Because if we have a fiscal cliff, if we have a treasury auction that fails, then everything changes. And so it's like there's still risk in everything. But if I'm trading defined risk, I mean, I guess my biggest problem would be if the whole financial market implodes, then we all have bigger problems. But if I can survive
Sure.
this market for another 10, 15, 20 years, I'll be fine. It's just, but it's going to be a grind. It's never easy. And anyone that's trying to wait here for all the certainty, it's like, oh, the coast is clear. We can do this and just trade bullish. I think you'll never have that. You'll never have full certainty of anything, you know?
Well,
So you just got to trade. You got to survive. You got to like the process. And, depending on your risk tolerance, depending on your time horizon, there's trade strategies for everybody. I mean, I run services for a lot of traders. That final hour session every day at 3 p.m. I've got traders that are asking me about Forex pairs and asking me about the futures market, asking me about stocks and options, and I sprinkle in it all because that's what I'm trading. I trade a little bit of everything.
well, there you go. So, if you want to partner through this hell volatility market that we are trying to all navigate through, make sure you visit Chris's YouTube channel. So it's YouTube.com/Chris Pulver. So Chris, I want to thank you for being here. I mean, you're a refreshing voice for me as a trader to hear from. And I appreciate having these conversations. We're going to try to do this at least once every few weeks
Sure.
here on Traders Summit. And I want to and for those of you that haven't been to Chris's channel, make sure you jump down below, comment to Chris, find his channel. And Chris, any parting thoughts before we let you go?
I mean, some of my favorite sayings would be, you know, I'm a retail trader at this point. I mean, I'm just a retail trader. Yes, I look at some capital, friends and family, stuff like that. But it's like, as a retail trader, if I can make money, I know I've been doing it for a long time, but I can still trade and I'm still confident in my ability to trade. If I can make money in these markets, so can you. I'm never better than any other trader. I'm super open-minded. Like I'm always willing to learn from anybody. So and that is good and it's bad. I mean, sometimes I question my own strategies. Like, is it enough? Should I be learning more stuff? And also I also know how to stay in my own kind of wheelhouse where it's like, this is what I'm good at. This is what I'm comfortable with, and this is working. So don't fix it if it's not broken, right? And just, I don't know, I think just enjoy it. I mean, enjoy the process. If you're doing it for a little hobby, if you're doing it, I'd say the only thing that I don't love to hear is when traders are like, their back's against the wall, they have to make money. That's never been good for me. Like, if my back's against the wall, I know this is a game of survival, but it's like, I never want to take a home run swing because if I strike out, you're done. And I never want, and I've had this a couple times, Blake, and if you don't mind me sharing,
Yeah.
my worst drawdown was it wasn't the summer of 2016 when Brexit happened. It was October 2016 when we had that later in the year flash crash. I got stuck on a very good technical trade. I was long pound Aussie, and we had like 3 missed weekly pivots in a row, and I loaded my account up and I had multiple standard lots running that was way too leveraged. And that flash crash was over 1,000 pips overnight, and I was down about 30% in a night. Now, I had two decisions. I can be the crazy, gutsy, I'm gonna ride this thing out and I'm gonna double down type trader. But you and I both know, Blake, that if that Brexit thing got worse, I go from a trader that's managing money to a trader that nobody ever hears from ever again. That would have been my career. So I decided to do the right thing. I scaled down my account. I took about a 15% loss and I worked through and I grinded through the next 6 months and I got up on top of that watermark again with like a $50,000 or $60,000 profit on top of where everyone started. So I mean, I stomached the drawdown, shaved my position down, built through it again. But like that loss, as dangerous as it could have been, was also the reason that it let me think clearly again and then focus on what I saw in front of the chart, which was we just had a flash crash move. I just made a killing in 2015 on the Swiss National Bank. I made a killing in 2014 on the dollar. I made a killing in 2012 on the yen. I mean, these flash crashes in Forex have happened. So when I saw that in October of 2016 with the pound crosses, I was like, okay, well, I'm not just going to go all in, but I'm like, I'm going to nibble here and just scale back in. And as soon as we recovered that within a couple of weeks, I got a lot of that profit back. I still took losses, but then I built through it, traded a nice pattern, And, it took about 3 to 4 months to carry that into the new year, but I was back on top by like January, February 2020 or 2017 to be profitable.
Well, I
That would
think
have been the big difference between me blowing up my accounts and surviving and actually making more money like 4 months later.
so. It's as we like to say, if you find yourself in a hole, drop the shovel. So
That's a great analogy. Yeah, because look, if you dig it deeper, it can get worse. And
yes.
I just thought I've been doing this for too long. I've got too much at stake. I've got to be responsible. And like I said, it was a mature thing to do, even though it sucked. And I had a lot of unhappy clients for that little window, but we worked through it. I'm like, look, we'll figure it out. I will grind through this. It might take us, 3 to 6 months, but I know what I'm doing. And sure enough, 3, 4 months later, we're back up, fresh highs. Everyone's happy. We survived it. But what I did learn from that is that's too much of a drawdown, man. That's way too much exposure. And it's like the lesson is simple. Don't over leverage. Don't risk too much because one of those swings you think is great. And, where was that pivot? Well, it was 1,000 pips lower. Guess where it came back to? It clearly came back to that pivot. It clearly had a nice little wave structure. It had a reversal pattern. It had a bottom, but it's just in the moment when it goes 1,000 pips in an instant, there's nothing you can do about that. So
So,
anyway, trade options.
Chris, I just thought about this, and I now know we're gonna try to wrap things up, but where, and I'm gonna ask you this, like, think about the dollar and about where the
Mhm.
dollar is at.
Yep.
How do you feel about the dollar and how do you feel about equities where they currently stand? I know you just said, well, if they rally to all-time highs, I'm going to think this is the stupidest, correction we ever had.
Yeah.
But where do you think we're going from here? Because I think traders want to hear your view on the dollar and equities in general.
Yeah. Oh, I think right now a weaker dollar is great for the global economy. It doesn't look good for the U.S. to start off in such a bad footing. The U.S. is way behind in equities. The U.S. is way behind with the dollar dropping as hard as it is. Gold has been clearly a fantastic asset this year. In the last couple of years, Bitcoin is emerged as a real mainstream allocation now. So I mean, the way I see the structure on like the dollar index is I think we have pulled back to levels I thought were fair, like the 101 to 102 handle. I'm looking at the Dixie. So I mean, I think realistically, this dollar could pull back to 103, 104, even like 105, Blake, and I'd still maintain a bearish outlook on the dollar. I think the longer term trend, like you said, if the global economy is going to be looking to kind of repatriate, move away from the dollar, I don't think a stronger dollar is good for anybody because usually a stronger dollar is risk off.
Sure.
And I think if we're going to see risk on flows and growth in the world, we're going to have to see at least a dollar that's probably going to hover around that 100 handle. I'd be pretty interested to see in the next 1 or 2 years, are we talking dollar at 90? Are we talking dollar down to levels that we haven't seen since COVID? But it remains to be seen. I mean, I think if it's a bear trap where we push below those like 99 lows, it pulls back into the range we've had since basically 2023. So I think I'm looking to take nibbles on the dollar. I don't like every individual currency pair. I think the April lows that we put in on Aussie dollar, New Zealand dollar, the top we put in on dollar CAD, the bottom we put in on dollar yen, the bottom we put in on euro dollar. I think those are very safe levels to say if the dollar is going to stay weaker, those tops and bottoms should not be invalidated, right?
Sure.
So I personally like the euro dollar right now. I start putting in positions around 111.15 on a pullback, and I'm going 111.15, 108.50, and 106.50. I'm going to level in case the dollar pulls back that much, but I'm targeting the recent highs. I think euro dollar highs. I just looked at that trade today. Euro dollar highs back to like 115.50. So if
Yeah.
I'm in at like 111 and change, it gets up to 115, I'll cancel the lower orders and I'll just take my 300 or 400 pips of profit. But I'm looking at a swing to see a little bit of a retest of the dollar lows. That'd be respectively the dollar highs and lows to see if the dollar gets a little bit weaker.
And how do you feel about equities here?
I mean, honestly, dude, I just want to pull back. I mean, so look, I made a lot of money through March and April. I haven't had a losing month yet, even though I managed some drawdowns. I didn't have a losing month. But equities, we're clearly seeing the signs that like recession risks have decreased quite a bit. Trump and company are very much vocal about like how good things are, take it or leave it, like whether it's right or wrong. But for God's sakes, just give us a pullback. Like we have gaps and gaps and gaps in the futures market. We have gaps in SPY. We have gaps. It's like fill something, like backfill, revert something. Like give me a pullback because I'd like to participate in a efficient market as opposed to, I guess if you didn't buy the April 7th low, you had a little bit of time to participate with all the crazy volatility, but you're just sitting there FOMO and like, where do I get my entry? And I don't want to say that I'm justifying buying all-time highs when I'm just hoping we have a gap fill. Like literally this week with that Friday close, China and U.S. talks over the weekend. I don't know if you saw this in the futures market, Blake, but it was a 1 minute candle at 3 a.m. Eastern time, and the market shot up like 3%. You can't trade that stuff. Like usually the futures market is very liquid and very easy to trade with a news event. It just had a little bit of drift higher on Monday, but the
Yeah.
market was done in a minute. And I'm just like, that's inefficient, man. Like the Forex market, it's pure efficiency to me. The futures market is way more efficient. So I'd love to see like a little 3 to 5% pullback coming soon. And then we can start to see some, the bulls have a lot of support now. I think the bulls, if we get anywhere between a 3, 5, even a 10% correction, no joke, the bulls are still intact. I think the bull market is still intact. So I'm hoping we get positioned. I get positioned for like any type of dips and pullbacks to then position for all-time highs. Anything beyond all-time highs, it's kind of cool. But I don't know how aggressive I'm going to be. I look, if we get to all-time highs and we get some runners, my projections this year on S&P, if we get there, 6,500 to 6,900, that's a great target to hit. But once we get there, I think we're in another bubble like we've been in 2018 when the volatility event. COVID was a crash. 2022 is a reset. These valuations are extremely high, and usually those return terrible. Like forward returns are terrible when these valuations are this high in the S&P. So I don't know how we can justify, 10, 15, 20% a year. We just came off of 20% years in the S&P, 2 plus 20% years. So usually that third year kind of trickles into like, 6, 8% on average, but that's right around historical norms. So I just don't know how we can keep this long in the tooth trend running without running hot in the deficits, running hot with fiscal policy, running dovish with the Fed. And if all these things happen, yeah, we kick the can down the road. We run this crazy hot economy. But again, it probably breaks. It probably is a bubble at some point. We have another round of deleveraging. If Main Street has recession, people start losing jobs. My big concern for the U.S. is if we start to see job losses, then we're going to start having more recession conversations. And if we start seeing job losses, they're not coming back, dude. Like AI and the whole paradigm shift or the whole regime shift into AI would be these job losses that would happen, let's say now in the next 5 years, any job losses are probably not coming back, unfortunately. And that's where, like, talking about onshoring manufacturing, what company is going to build a plant and build an assembly line in the US that's going to put people on the assembly line? Nobody. It's going to take 3, 4, 5 years to get this stuff online. It's going to take like automate it. It's going to be humanoids. It's going to be AI. And it's terrifying to think like 90% of jobs in the next 15, 20 years could be AI replaced. It's really depressing. But I think it all started during COVID. And here we are 5 years later. And it's like AI is this big thing. It's the future. It's going to drive margins and profits like never before, but you're going to do it with less people. So
UBI, UBI, here we come. And as much
I
as I
know
don't like to say that,
I know, but that's the thing is like that is a very real conversation. And as much as it sucks to think about, I wouldn't be surprised if it's the future. And I hope it can be financed. I mean, the last thing I want is like we have UBI because everyone's just like, I can't work. I'm displaced. I don't have the skill set to work and do something in whatever industry I want to work in. I think the industries that are safe would be, and this is crazy to feel like this is a complete switch. But if you're in a trade, if you're literally
oh
like
yeah.
a carpenter, an electrician, a construction worker, like you have hands-on skills that can't be replaced really by AI, you know? And it's crazy to think, but like you don't need to go to college for that. You can be an apprentice and you can have old school skills that people will pay top dollars for. Like, when's the last time you got a quote for a house repair, right? When's the last time like a plumber, an electrician, landscaping? The projects are ridiculous, dude. I mean, my buddy's in California. He got a quote for a kitchen renovation that's like new floor, some new shelving, $65,000.
Yeah. Yep.
I'm like, what's material cost? Like, what's material cost versus labor cost? And it's like, well, if he quotes out, let's say this guy quotes out, 65K on 10 projects, somebody's going to pay it. And that's all he needs. He can turn down 9 projects, take one, and get paid a nice chunk, do 4 or 5 of those projects a year. And this guy's making pretty good money on ridiculous profit margins.
Yeah.
So
It's a
a
weird
weird,
world we live in. It is.
absolutely. It's a weird place. And I hope it's not like that. I mean, I want to be the glass half full. I want to be a Buffett that said don't bet against America. But man, there's something about corporate greed that I just feel like it's so ruthless that nobody cares. Like it's profits and greed above all else. And if we happen to displace some people that, can't find the skill set or can't afford to figure it out, it's like we're a bootstrap economy. It's like, well, I mean, if you're basically making people obsolete, that's a hard world to live in.
It
If you don't
is.
have a place for people to work, and that feels like you're not contributing, and it's just, I don't know, man, that's super depressing. So I'm trying not to be that guy. I'm not doom and gloom. I mean,
No,
I know
that's
what I
why.
do
That's why
is probably okay.
when you jump on Chris's show, he won't be, but make sure you guys, if you want more Chris Pulver, you know where to find him. So, Chris, I want to thank you for spending your time with us today. I know congratulations is in order. You're a new father, so congratulations with the little one. And like I
Thank
said,
you.
I'm gonna look forward to catching up with you here in the next few weeks. If you guys like what you hear from Chris, make sure you give him a thumbs up. Subscribe to the channel down below so you don't miss this exclusive content, but more exclusive content on Chris's YouTube channel. Chris, good luck in today's market, and thank you so much for spending your time with the community here at Trader Summit.
Sure, anytime, Blake. Thank you so much.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.